I wanted to start with the impact of Hurricane Harvey. 12% of your production comes from the Eagle Ford, which is exactly where we're seeing the most impact on production. Where are you now?
Well, first off, all of our employees are safe, which is the most important thing. But at the same time, we certainly have a lot of empathy for all of those who are impacted, whether they be in Houston, elsewhere along the Texas Gulf Coast. Even some of our employees did lose their homes during this, and so we are working very closely with them to assist them in their recovery. We certainly have tremendous empathy for everybody impacted. We shut down our Eagle Ford in advance of the storm. We have now resumed production. We'll have the vast majority of that production back on by the end of this week.
Does that mean that the downstream capacity, so the pipeline and the refiner capacity that you're related to, is now working functionally 100%?
It's working very well, but it's not working 100%. And there has been some limitations with the fractionation capacity in the Mont Belvieu area because the end user of that, the petrochemical industry, was essentially shut down. So the end user of those products shut down, they didn't have anything to do with them. And so that's impacted that industry somewhat, which is why we're not quite at 100% at this point.
Do you take any hit on earnings from this?
Not significant.
What about bringing the labor in and bringing the actual equipment back in? Are you having any issues with the roads and the infrastructure because of the hurricane?
No, not at this point. We just have 2 rigs working in the Eagle Ford. They're back working now, no problem. The crews are there. The rest of the field employees are Devon employees, and they are back working through their personal situation, but they're back working as well. So we see no short-term impacts. Now, there is a question of the longer term as to whether it be a pull from the rebuilding versus working in the industry. It's too early to say for sure how big of an impact that would have.
But that would increase your costs, I would think, for labor?
It might increase the labor cost somewhat, but that's frankly a small component of our overall cost structure, and so I don't see a material impact on the business.
All right, let's talk about the general transformation that Devon has undergone in the last 4 years. You made a huge bet in the Eagle Ford. You spent $6 billion buying up those assets, and you're mostly an oil company now. I think people who don't follow you closely still think of you as natural gas. Talking about the Eagle Ford, BHP is trying to offload some of those assets. You have a JV with them. You jointly share operation. Would you buy those assets?
It's not likely that we'll be a buyer of BHP's 50% interest. It's not because of the quality of the asset. The asset's a fantastic asset. But we as a company already have a very large inventory of very high return opportunities that we can drill. And so we are not really in the acquisition business right now. We are more about the execution on our current existing base.
Would you consider selling your assets in the Eagle Ford in order to put more money into, say, Delaware?
That's always an option that sits out there, just as there's an option with that for any of our assets. If someone would place a real premium value on that, we'd have a discussion around that. We don't have any current plans to, but I never ruled out that option with the Eagle Ford or any other asset.
Which talks about where you are on the sell side, because you've been selling a lot of assets, you've been dumping a lot of money into your premium assets like Scoop Stack, like the Delaware Basin. Where are you on the sell side?
Well, we've laid out our Vision 2020, which is to concentrate the bulk of our capital spending in the Delaware and the Stack play. And as we execute on that strategy, we do see several $1 billion of additional divestments over the course of the next couple of years to further infuse capital into those programs as well as to build what we consider a fortress balance sheet.
So where's the selling going to come from?
Well, we have a lot of optionality around that, and so we haven't made any specific decisions on that at this point. But we have a lot of high-quality assets in our portfolio that just because of the extreme quality we have in the Stack and the Delaware are not going to attract capital in themselves. And if they're not attracting capital for us, perhaps they would be more valuable in somebody else's hands. But we have a lot of options, and it could be one area, it could be a combination of areas, a lot of options on how we do that.
Because there is a story that if you wound up selling, say, Barnett, if you wound up selling your assets in the Eagle Ford, that would really give the market confidence that you're really serious on developing Scoop Stack and the Delaware Basin, that you're going to put all the money into that.
Well, we've laid out a strategy, and I think it's clear to the market that is the strategy. What we haven't articulated is exactly what asset we're going to sell, because it could be opportunistic, and we'll have to see how things evolve.
So you're not as motivated?
We're very motivated.
Okay.
We're absolutely motivated around our strategy. What we're not motivated to do at this point is say exactly what additional assets beyond the $1 billion we're currently selling are going to do that.
So, but why don't you trade at a premium like other Permian players do?
Well, I think because we are early on in the development of these assets, both in the Stack and the Delaware Basin, we have to demonstrate to the market the consistency of our results, and we think we're doing that. If you look at us now, our first 90 days of production that we get from our wells is the highest in the industry. That's not for one well, that's for all wells that we drill compared to all wells that other of our peer companies are drilling, all operators. We've been demonstrating that for the past 2 years. What we need is a longer track record of doing that in order to really get the value in the stock.
In a $50 to $45 oil world, given the expected asset sales that you're going to make over the next few years, what conditions would have to be in place for you to ramp up your CapEx?
First off, we need to have the continued success we're seeing right now in the STACK and the Delaware with the appraisal program to test different zones, what the spacing of the well should be in those various zones. It's all working out extremely well. We just need to see that continue a little bit longer. And then you can look for us to have a continuous moderate increase in our capital spending. We don't want to ramp it way up or ramp it way down. That's not the right way to run a long-term organization and a long-term plan, but I think you'll see a gradual ramp up as we get those results.
And then my final question has to do with the broader impact of D.C. We talked to all our C-suite executives about this. There was a story that the Trump administration was going to do a lot to help the oil and gas community really, really grow. What have you noticed from D.C. that has had a material impact on your business, good or bad?
Well, it's obvious that President Trump realizes the great opportunity that's been provided to the oil and gas industry, and that we're delivering on that opportunity of affordable energy for many, many years, which is obviously good for the country. And he recognizes that and is in general supportive of that. And so he's creating the environment where we can do what we do best, which is drill oil and gas wells in a very environmentally and responsible way to provide the energy to support the way of life that we enjoy as Americans.